Hello everyone, and welcome to the HyperNest Podcast. During this pod, we interview incredible founders of DeFi protocols and also blockchain and super interesting ecosystem that are leading in the area of DeFi and real-world assets. And today I have the great pleasure to have with me Jack, that is the speaker of RedBelly, that is an incredible ecosystem that is focusing on real-world assets. And but without further ado, Jack, I leave you the stage so you can introduce yourself, and then we dig a little bit deeper in the RedBelly.
Yeah, absolutely. Thank you for having me. Really appreciate it. Hi guys, my name is Jack Bronson, ex-TradFi. I started in RMBS capital markets at Redwood Trust. Slowly got orange pilled into the crypto ecosystem. Started a venture studio with two of my colleagues who were ex-Immutable, which did very well in kind of the last run, onboarding new folks through gaming. But we started a venture studio called West Coast Ventures, and my background in TradFi obviously kind of leaned more so towards RWAs, and this was before BlackRock was tokenizing T-bills with the Biddle Fund. It wasn't as quite what the cool kids were doing yet, but quickly became a larger part of the overall narrative. Met the RedBelly folks through one of those IMX colleagues who was Australia-based, and absolutely fell in love with the project. Just saw all of the possibilities, saw what they were doing and what they were building, and wanted to get more and more involved. And now I'm heading their partnerships, grants, and leading the ecosystem growth.
Fantastic. Thanks a lot for the intro. Can you tell us a little bit about the story of RedBelly, because it's quite a mature project, starting maybe 15 years ago or something on this line?
Yeah, no, it's actually a really cool story. So it started as a consensus algorithm out of the University of Sydney. It was built by a professor there, Vincent Grimoli, who basically created the DBFT consensus mechanism. And I can go more into that later, but
yep.
It was built in tandem with the CSIRO, which is the research and development arm of the Australian government. And one of the things the RedBelly execs always like to hint on is the CSIRO is actually famous for inventing Wi-Fi and notoriously bad at commercializing their products that they help incubate, right? And so RedBelly Network was really built with a venture studio called Block 8, which basically bought the IP from the University of Sydney and built a bunch of things around that consensus algorithm to commercialize it. One of those things being an EVM layer to make it more accessible to all of the builders. Ethereum has all the builders in the ecosystem right now still, as well as making it purpose built for a specific vertical. And we can dive more into the tech and why, but the vertical that we ended up going with was real world assets. Back then, again, it started in 2017, so STOs were a bit more the rage then, but we really were focused on compliant asset tokenization, where it's easy to forget. Back then, a lot of people were like, okay, regulation, very, how crypto is.
Yeah.
When it comes to regulatory environments, it's we can do whatever we want, but RedBelly was really focused on let's lean into regulation. We want to work with large institutions. We think that blockchain rails can increase efficiencies, which they can, and the economies of scale that we can generate by having kind of these institutions on chain outweighs the legacy system. So that's that's really the story of how we got here today, really, and why we're compliance focused L1, and what we're trying to build here.
Well, thanks a lot for the round trip in this super interesting story, and I think that it was, in my opinion, a super winning bet to focus on real world assets. I think that now it's visible almost to everyone. Looking at many ecosystems kind of compare themselves to each other via the total value locked, and what I was reading is that there are already 1.3 billion, in RedBelly, although it is not very visible on DeFi Llama. And I also, as far as I know, there are billions and billions that are entering, in RedBelly, because of partnership with several, I think institutional players. Or do you want to tell us something about it? Because it seems to me that this is very, very encouraging, very revolutionary.
Absolutely. And so, first thing I want to touch on is I think TVL is possibly the, most like kind of overweighed
Yeah.
metric when it comes to RWAs. I think it's a really, really good metric for seeing how good the DeFi ecosystem is, right? Because it's showing how much is locked into smart contracts. But it ignores a lot of the nuances when it comes to RWAs, right? Because what we're trying to really get at here is this tokenized asset backed by something else, right? That doesn't necessarily mean it has to be locked in a smart contract, right? It could be free floating. So that's one of the things where I can see in the future state there being a number of other key metrics when it comes to judging RWA ecosystems and RWA issuance, right? Like it doesn't even account for like has any of these assets defaulted, right? It could still be locked in a smart contract, but it could be dead assets or defunct.
Yeah.
And so I think as we see the space mature, I think we're very, very early when it comes to RWAs. We'll see that, yeah, TVL is a good metric for anyone in Web3, but it's not the end all be all metric at all. And so one of the things when it comes to kind of these asset issuers, right? It's yeah, we could lock 20 billion assets today into smart contracts, right? But that doesn't necessarily mean they would be like doing anything, and that actually wouldn't be that useful to the ecosystem. So where our focus really, really is let's get high quality new products in front of able investors, right? And right now, what like from a regulatory perspective, what that looks like is mostly wholesale and accredited investors with our goal to make them as retail friendly as humanly possible so that DeFi or you and me could access things like the Apollo high yield credit fund that we otherwise wouldn't be able to, right? That's really like kind of the end goal. And so, yeah, when it comes to TVL, I think right now it's kind of an arms race of getting as many different new assets. And then what we're going to start seeing is, yeah, like getting tokenized S&P 500 is awesome. We can kind of already get that in a number of other ways that are a bit easier, right? What new products and what exotic products that people haven't been able to access before, that's what's really going to start separating chains, right? What new composable products are coming live.
Absolutely with you. We should have a better way, a different way, in general to to evaluate blockchain, in particular the ones that are completely focused on real world assets. And from these, the next question is related to the partnership with the Liquidize, if I'm pronouncing it correctly, with the tokenization of equities, and I'm very excited because of that, because I was the one betting hard, and I'm still betting hard. We're still supporting startups tokenizing equity, because I believe that the majority of the equities in the world will be tokenized for obvious reasons.
100%.
So do you want to tell us more about this partnership and how also RedBelly would like to tokenize equity in the future or onboard more tokenized equity in the future?
Absolutely. Let me paint the picture as well. So as you probably know, startups and private, the private alternative equity space has grown massively. And what's very, very clear from a macro perspective is that these companies are staying private for longer. So what does that mean? It means Alessio, it means me, we can't invest in SpaceX, right?
Yeah.
From a normal, right? Which until they have a liquidity event, but like that is determined by a number of factors other than just performance. And it's very clear these companies are staying private for longer. So what Liquidize is doing is basically they are a Carta equivalent in Australia with about 500 million in private equities of Australian private equities, right? And what they've done is have all the licenses to run an AMM and order book to create liquidity on the privately owned shares in their system, which is, in my opinion, so sick.
Very
Because
cool.
think about it like this: if Alessio had, you're a founding engineer, right? You may have vested, half of your like stock. That stock at the previous round is worth $500,000, but like you have to wait until a liquidity event, whether it be an
Yep.
IPO, whether it be an acquisition, and you have no liquidity on that. Maybe you could get a loan, like that depends on kind of your banking environment, that depends on who would be willing to lend against it, right? But you have no real way and no real kind of hand in order to determine when you can get liquidity on that. And what this does is allow, okay, like every single person who's in that ecosystem, the opportunity to, hey, like maybe I could kind of, de-risk some of my shareholdings, and also at the same time give investors like you and me the opportunity to invest in companies that otherwise we wouldn't have access to, right? So I like to use the SpaceX example, right? Like we all want like a piece of SpaceX. We're all trying to find creative ways how some of us through Kathy Wood's ArcX or whatever, right? And this is a way to get direct access to some of those, and so you can see how it solves a two-sided kind of issue on the equation, whereas it's hard for us to get exposure to certain private startups that we would otherwise want access to, and it's hard to get liquidity on the other side, right? And I think that's a really, really good example of what we're trying to accomplish, which isn't just tokenization for the sake of tokenization. It's really like, how can we solve problems for these end users?
That's absolutely super cool. Yeah. So having access to a private deal in equities that are not trading publicly yet, it is very interesting and is an enormous market that still need to it is not accessible yet to many people.
Yeah, absolutely. I was curious, what are your kind of thoughts on the tokenized equities? You think all equities should be tokenized? Just
I strongly believe that all the financial assets first will be tokenized. So I'm a ultra bull in that, and I'm an ultra bull since 2017. But in 2017, people were looking at me like I was a crazy, visionary cypherpunk. Now, still but less.
yeah,
And in fact, fun fact that I never say probably, in 2017, we were working on a project of tokenization of yacht. So to give the possibility to a large amount of people to basically buy this yacht, this very,
yeah,
very big yacht that they were rented then. So they were producing, of course, a lot of a monthly fee, and then we could have redistributed this fee to the holders, right? But apart from that, it's a little bit extreme. Other assets, like for example stocks, bonds, the classic one, like REIT,
yeah,
ETF, they just need to be tokenized. Full stop. Because today, for example, if I have stocks of a company, even if it's public, I have stocks of a company that is public, and I need to move from one broker to another broker. Oh man, I don't wish to anyone to go through that process. So there is a
it's
complexity. It's crazy. It's just unbelievable. So, and this is not a matter of compliance, being compliant or not, because that broker is compliant, the other broker is compliant. I am compliant with both. They should be done, right? Move this to that, click, check. So I think that the possibility to have blockchain in the background, it will be just so much better. And therefore, I think that all the assets, all the financial assets will be tokenized, just for practicality first,
No, I
right?
couldn't agree more. And actually, that exact scenario is why we put in KYC at the network level,
Yeah.
right? Right now, it looks like, we're just whitelisting wallets, but we're actually trying to implement verifiable credentials. So Alessio, you're let's say an accredited investor. You're also let's say a licensed real estate agent as well, right? Like you have all these capabilities. If that should travel with you like a
Yeah.
digital passport to whatever broker dealer, to whatever stock brokerage, to whatever kind of real estate investment website, right? Let's say you want to sell it, like can you even do that, right? All of those kind of licenses, accreditation checks, that should just live with you, the user, similar to how we all carry our ID around with us, right? So that we don't have to keep going through these kind of redundant processes.
And I love it. I love it. I think it is a perfect bridge to the next topic. So let's start talking about the incredible technology behind RedBelly. And you just touched on the ZKP, so the usage of ZKP with verifiable credentials. So essentially, I can prove to a system that I am, for example, an accredited investors, right? And therefore, I can have access to XYZ without redoing the AML again, the KYC again, KYB again, right? And without disclosing, completely my data every time, right? This is at the protocol level. Is it something? Am I correct in this direction?
That's exactly correct. And I think the ZK magic of it all. And for context, I'm not the most technical person, so this is one big game of telephone, but I know enough to kind of give the basics on it. We store no PII. We run it through some sub, one of the most like one of the largest like KYC KYB providers in the space. And yeah, I mean right now again it's just we're whitelisting wallets, right? It looks just kind of a permission blockchain, but our big product launch that's going to happen is that verifiable credentials, right? And finding the right partners where that works. Like as you can imagine, that's a monumental task to make that accreditation check work. Because for example, right, like a large institution like it's called Charles Schwab, right? They need to keep actually that data on file, right? And
Yeah.
so what do you do in that scenario? It's like, well, it's ZK and it's with the user. Like there's a lot of friction at different points, but
Yeah.
it's something we're very, very much committed to make as easy as possible for the end user because ultimately, right, we want to realize that benefit of okay, let's make it very easy for you to go from one service provider, one stockbroker, one, asset issuer to the next without having to wait and without having to KYC, KYB all over again.
Absolutely. I think this is the only, maybe I'm too optimistic, but I think this is the only possible future, right? So, because if I have the possibility to click one button and say prove it, and I can immediately interact with, a specific broker, a DeFi institution, or buying a REIT, whatever it is, right? But I can do it with one click because I've already done my KYC, AML, KYB, whatever. This is already done. It is on the protocol level, so I can just click and do it. I think if this is working, all the others that will not implement this system will be behind, right?
Yeah.
So I don't see a future where there isn't this type of technology.
What it comes down to is it actually a way larger problem that affects the entire ecosystem, which right now there's a significant risk, right? If you're like a Web2 asset issuer looking in
Yep.
for a lack of what we call like regulatory harmonization, right?
Yep.
Which, and what I mean by that is, the Swiss DLTA, right? That's one pretty comprehensive framework for the regulation of tokenized assets and digital
Yep.
assets, right? That has some nuances that are different than Singapore, which has like kind of the other most comprehensive, under the MAS Monetary Authority of Singapore, right? And then the U.S. has its own kind of ways to regulate these assets. What's a security? What's not a security? What's available to retail? What's not available to retail? And all of these things. And until we get a kind of unified framework, it's going to continue to be a hurdle to get the a universal way for all of us to do it. And what I could see happening in the meantime, right, is okay, so you're regulated under MiCA, you're selling only to European peoples, right? If that's the case, then it's pretty broad, pretty open, and you can do all of these things that we discussed. However, if let's say someone from the Philippines is trying to interact with these assets, they may have a more friction process. And in the meantime, like I think that would be okay as long as we have some way to explore the test case of it and see what the future could look like.
Yeah, I'm completely with you. So if we don't have a unified global regulation, there will be always a little bit of friction here and there, right? So let's hope that things will evolve, in the right way.
Absolutely. Yeah, and then the other piece of the tech stack that we haven't had the kind of too much time to touch on. So the consensus mechanism called DBFT, Democratic Byzantine Fault Tolerance. So how a normal kind of network works, right, is all of these nodes are competing to mine the most recent block, right? And Bitcoin that leads to about 10 transactions per second. In DBFT, which actually is the world's first formally verified consensus algorithm. So it provides instant finality and it's mathematically proven to never drop a transaction. The network will never fork, so there will never ever be a need for a layer 2. And that's because instead of all of the nodes competing against each other, which uses a lot of redundant compute, they actually all work together to form a super block, which then posts to the network. And so what that's done is two things. One, that instant finality and extreme secureness, but also two, as the network grows, it actually becomes faster. And in lab testing, I think this was 2 years ago, in lab testing measured against the transaction volume for 1 hour against NASDAQ, Uber at peak volume, the World Cup transaction volumes, and measured against every single blockchain, it outperformed every single one of them. All of the other blockchains, Solana, ETH, all of the ones that you could kind of think of, they all went down under those conditions. RedBelly didn't go down. It also achieved 660,000 TPS. So it's the theoretical max. And most recently, it actually achieved on the EVM compatibility, which obviously slows it down, on the EVM layer, 53,000 TPS.
Which is still super, super fast, but I think it's super exciting. And some of the investors here at RedBelly, when I had a chat with them, they told me, you can't imagine that they have an incredible technology. So it's not only a matter of, okay, they're in the narrative, real world assets, but they're actually building something that is compelling. And in fact, when I was reading a little bit more about it, I was really, really super excited, super, surprised of certain things. Yeah, it's also patented, right? The super block technology, right?
Yeah, it's patented in the U.S. We're looking to get further patents as well. We think it's an extremely, extremely novel technology that we haven't even begun to scratch the surface, right, of potential use cases. And I like to think about it like this, just because I'm come from the TradFi world, is so how, for example, my mortgage loan gets priced, right, isn't actually the Fed funds rate, the one that are we lowering, rates going down or up. It's actually the price that investors are willing to pay for my loan, and usually that's some sort of a premium on top of the 10-year treasury, things like that. So right now it's probably in the sevens or something. But so what happens is mortgage loan is bought, right, and then packaged with yours and a number of others, and then sold as an RMBS or a whole loan sale to either a bank or to an insurance company who they're called ultimate buyers that are looking to balance their books against kind of hedge their duration risk, as well as just get the fixed income, because it's an insurance fund. They need to start paying out premiums at some point, right? But so that's what happens. And so in order to hedge that exposure, because from the time that loan enters my REIT or my conduit for about 90 to 180 days, right, I'm long loans. And so there's a blend. You can do it in a number of ways. One being a blend of these kind of exotic products. One being, CDSs, which you're probably familiar with, credit default swaps, the insurance
Hmm.
for defaulting, as well as things called TBAs, which are Fannie and Freddie future priced issuances, so government backed stuff. But those are just proxies for how can I hedge one property, right? Or my portfolio of loans. Like, there's no perfect way to do that. With tokenized assets, though, you can get near perfect hedges, right? And the velocity at which you need to trade those is actually quite high, right?
Yeah,
And so you're going to need, and let's say, like, bring in agentic kind of trading bots and things like that. You're going to need a really fast and really secure network. You can't have a transaction drop. You can't have my mortgage fall through the cracks, right? I think I've financed my house. I'm still on the hook to buy it, right? That can't drop, and
yeah,
that can't, like, slow down. And I mean, we've all had the kind of, like, heart stop, like, oh, did I send that? Like, I've got 50 seconds and, like, waiting for ETH to process my transaction. Is that going to the right address? Is it going to drop? Is it going to go through? Um, and what I really like about RedBelly is it's built with that in mind. Is let's make it very fast, very secure, so you never have to worry about that.
that's how it should be. Fantastic. What about, I think that from the great tech innovation, we only didn't touch on polygraph, right? That it's also part of the incredible innovation that the Red Belt is bringing on the table.
Um, Polygraph.
That should be essentially a system that provide more security and accountability, and should basically create a sort of proof that the validator agree on a certain state, and they provide zero knowledge proof that certain validator might also be malicious.
Got it. Got it. Yeah. So that is bridging into a place that I am not the biggest expert in when
Hmm.
it comes to kind of like the deeper tech portion
Hmm.
of the consensus and of what the building of what we're building. Um, but maybe that's a better question for someone like Vincent, who I'm happy to kind of talk with and give a more direct answer on that.
Sure, we can always publish it in our together in when we release the podcast. We can also publish these, in appendix, or in the blog post that we usually do. So,
Yeah,
uh,
absolutely.
okay, let's look at. I think that the real world assets is a super hot narrative at this point, and there are a few contender entering in the space. So apart from Red Belly, there is probably Mantra, there is Plume, there is Onzine, as far as I can pronounce it, and few others. I think there was
Ondo
also the
announced
now.
layer one.
Huh?
Ondo announced that they're doing a layer one.
Although exactly Ethena,
Yeah.
collaborating with I think Securitize to launch also their layer one focused on real world assets. So it's obviously a super hot narrative. How Red Belly is positioning them, compared with these other players?
It's a really, really good question. I'm very happy you asked it. So, um, you know, I think first of all, right, RWAs are so new, right, that it's not really about kind of us versus them when it comes to a
Hmm.
competitive landscape. It's really all of us who are preaching, no, like, blockchain is a better technology and a better way to work with these assets against the status quo, right? Which is transactions happening off chain, a lot of middlemen and kind of extraneous and what's it called? Double transactions and things that are the legacy system, and it's convincing those folks who are very comfortable, right, transacting off chain, that this is a better way to do business and that there's, like, actually an advantage, while the technology is all still new. And actually the cost savings that everyone preaches about tokenization, it's kind of hard to say whether that's actually able to be realized given kind of the cost models of a lot of the current solutions, right? it's pretty. If I'm the manager of a $50 million hedge fund, right, and I'm looking to tokenize and kind of put that fund on chain, there's costs, right? There's serious switching costs in order to do that. And so then you may be able to realize that over the next couple years, 5 years, but at the same time, right? Like how people think more in weeks and months in crypto than kind of that long term horizon. But no, I think where we really have planted our flag is we are the most compliant and cleanest liquidity chain in the entire space, right? We
Mhm.
lean into compliance. We want to work with regulators. We want to work with only the most compliant kind of technologies in order to really get to the composable piece as fast as possible, right? Because you can't have the worry of AML or the friction of having to kind of continually double KYC all the time and really gain like kind of that significant enough traction to get to like the future iterations, in our opinion. And so we're working with mostly Web 2 asset issuers to bring new products into the space. And that's really where we've seen kind of our sweet spot relative to others is, let's say we're talking to who's someone that like hasn't played in the space at all or kind of hates blockchain. Let's go with Carlyle Group. Bill Conway hates crypto, right? We're like, okay, like understand, right? But let's say you carve out a little bit of your private equity pool and you want to tokenize it, right? What you would have to do in order to do that is make sure all of the investors in it are KYC'd and things like that. That's a friction for you. That's a cost. And so we make that extremely, extremely easy to make that decision, right?
Yeah.
And we see the kind of growth of RWAs as a massive onboarding event, not only for investors who may be interested in more of these kind of like asset-backed tokens, right, as opposed to kind of more speculative things, but also for asset issuers who are looking to test and see what blockchain technology can do for their businesses. And so working with those businesses is our top priority, and actually creating double-sided solutions as we talked about earlier in the podcast. That's absolutely what we're in the business of doing, and I think Mantra, Plume, Ondo, they're great at what they do. I think Plume's doing a really really good job of penetrating kind of the RWA fi, RWA DeFi kind of realm. I think Ondo's doing a great job in terms of their go to market, in terms of kind of starting with let's build up a war chest of TVL and distribution, and then build an L1 around that, right? I think they serve kind of different purposes, and I think we can all, there's like we all talk about. There's trillions and trillions of assets. It's not all going to live on one chain, and if it did,
Yeah.
that would be the slowest chain in existence, right? So, I think it's finding creative solutions and really picking what what problems in the space you're looking to solve. That if you can kind of narrow in on that, which I believe we have, you're going to be a winning chain.
Absolutely, absolutely, and I'm completely with you, right? So at this point, the global crypto market, as far as I know, is less than 3 trillion, but there are about 800 trillion to tokenize. So for
Yeah.
some data that I was checking, so there is a lot of assets to tokenize, right? Um, okay, very very interesting. Thanks for the overview. But regarding all these real world assets, right? That is also not, in my opinion, the best definition that we have in the world, but so far we cannot change it. From those, mostly we have tokenized, as far as I know, we mostly have tokenized debt, in particular private credit, right?
Right.
So according to the last, so I think as of today we have 19.5 billion tokenized, but the vast majority, like more than 12 billion, are private credit, 5 billion are treasury debt, so U.S. Treasury as usual, right? And the rest is much smaller. Do you have any specific area where RedBelly is putting more effort or more focus, or any type of real world assets?
We like to be asset agnostic, right? We really
Mm-hmm.
want to be kind of just the underlying foundation, right? That all of these asset issuers, all of these investors can do business in the most, the easiest way possible, right?
Mm-hmm.
That being said, I can speak to what verticals I think really interest me personally. And
Mm-hmm.
from what I've seen talking to a number of different kind of category leaders when it comes to it. And I think the private credit realm, and more specifically, factor financing, I've seen to be the number one kind of easiest way to realize some of the net benefits of tokenization, being cost savings, being kind of taking out middlemen, being taking bringing down the cost per loan. Talking to a number of different issuers in that space, right? Where it's basically we're doing 1.6 billion with Hutley for rent rolls. You may know what a rent roll is. 6 months ago, I had no idea. Um, but it's basically a landlord's portfolio of all of their rental agreements, right?
Mm-hmm.
And imagine you could get a forward payment at like 80 cents on the dollar for like a year's worth of forward rental agreements, right? Would be kind of nice to have. I
Great.
could buy more. I could buy more properties with that, right?
Mm-hmm.
Um, and so, what what would be required in order to make that happen in the Web 2 world would be you'd have to go to a bank and you'd have to go through multiple rounds of credit diligence, and it would be a pretty expensive loan, right? Because they'd have to open up an entire shop just to be able to process that loan and service that loan and all of these things, where in the Web 3 world we can remove all of those middlemen, right? Remove kind of the bank entirely. It's private credit, a non-bank lender, and say, yeah, I mean, if as long as I'll take those cash flows, you take some stable coins, right? Really easy transaction. And we're seeing that in God, so many different verticals, manufacturing, um, car payments and car loans, seeing it in what's it called, the entertainment space as well. It's really just one of those things that is in high demand for a cash flow perspective from most people that are on any form of net 30-day delay, net 30 to net 90-day
Yeah.
delay,
Yeah.
and anyone and demand for kind of that 18 to 20% return range. So depending on obviously the credit profile of the counterparty, but that I think there's a lot of great solutions out there, and a high degree of need on both sides of the coin. And I think to me, personally, that's immediately the most interesting a kind of use case.
Absolutely. The whole area of trade finance is actually enormous. And when I started to study it and I realized it's $1 trillion business, I was like, really? That's incredible. I didn't have
Yeah.
any idea about that.
Yeah. I mean, yeah, how much trade finance exposure do you have in your portfolio right now? Me, very little.
But only one company we have. All right. In terms of, so I think we've been talking a little bit of broker or institutions that you want to get on board on your side. What about on the other side? What builders would you like to attract? So what type of dApps would you like to attract to RedBelly to grow the ecosystem?
Phenomenal question. So I think the types of builders we want to attract are those that see kind of some of these tokenized assets, some of the as more as primitives, right? As okay, a tokenized S&P 500, what can I do with that? That's new and different, right? Can I do what does that unlock for a perp market, right? I can't buy a 50x leverage S&P 500 in my stock brokerage portfolio. That's something that could only be done right in a DeFi or on-chain setting, right? But also those that are looking at these assets as ways to create new and composable investable products, right? As well as those who are trying to create broader accessibility. to these assets, right? Because again, we live in more developed economies, and certain jurisdictions it's much harder to get access to some of these assets, and so those that are focused on that, and anyone that's looking to build products around RWAs that can either increase the velocity of them, that can increase the accessibility of them, and is focused on doing that in a highly compliant environment. And I think those types of builders, I think lending protocols to unlock liquidity on things like gold and things like that, those are definitely top of mind. Definitely, we're looking heavily into the agentic AI space. What can different AI applications do with these products? Like I said, hedging opportunities for different portfolios and giving broader access to those. But that's really where our head's at. But I'm happy to talk to any builder, anyone who's interested in the RWA space, to point them in the right direction, because we're always in search of good products, good projects.
Yeah, I mean, super excited about it. I'm really looking forward to have this democratization, of finance, and might potentially arrive on chain, as you said. For example, a money market, right? A lending product. So now only maybe private investors, they have a lot of, for example, of shares, they will start to borrow against it, right? I mean, Elon Musk does it, of course, a lot of private investors I know, but the classical small investor that have some stocks there is not going to borrow against it to, I don't know, to go long another product. They don't do it, right? First of all, often they don't have the possibility in their broker, number one. Second, they also don't imagine that potentially it's possible. They don't consider this possibility, at least. So providing access to these tools in a compliant manner, and also simplify the access to that, I think it is very useful for the classic small investor, right? That is just buying his Tesla stocks because he heard about Elon Musk, right?
Yeah. No, I mean, I was talking with someone I just came back from Digital Asset Summit, which was a phenomenal conference out in New York. And this one guy, he was building a synthetic perp market for RWAs, starting with different commodities like coffee, soy, grain, and even like Korean won and things like that, where you could create futures contracts, perp contracts on that. And I was like, this is an awesome product. Like, what a great kind of use of it. And if you had kind of the underlying as well, right? Like, what could that unlock for you? And so those are the types of conversations that always get us really, really excited.
Absolutely. Well, so we were discussing about those projects. If those projects want to get in touch with you, because our community is a community mostly of startups and investors, how can they get in touch with RedBelly, with you?
Feel free. You can always reach out to me at jack.bronson@redbelly.network. My email is always open. That's a great way to get in touch, as well as you can find me on Telegram at Smokin, SMOKIN crypto, CRYPTO. And that's an Easter egg for a certain Instagram influencer, but we can story for another time.
No worries. We're gonna type it inside the comments, and therefore it's not gonna be a problem. And looking at the future of real world assets, I think we touched on it briefly before. What's your view on the future of real world assets and the tokenization of assets in the next maybe 1, 5, and 10 years?
Yeah, I think where we're at right now is it's still, and it needs to be, right, is let's get all of this stuff on chain, right? Let's attract as many, this is the onboarding kind of process. Let's get as many assets on chain that should be on chain, right? And again, tokenization, it's not fit for everything. We shouldn't tokenize my espresso shot, right? Like it's not for everything, but let's get as many use cases as makes sense, right? And then while we're in kind of this crypto forward administration, I could see, some of the regulation being laxed, right? Where the stringent, this is a security, this isn't a security, um, being more so, hey, like, let's kind of foster innovation seems to be the approach. Is, yeah, okay, like it's still going to be regulated by some body, right? But let's not make it so, oh, this is only available to accredited investors, right? I could see that very much leaning more so towards, why is $5 million the gate to investing in this fund? It makes no sense.
Yeah.
And so I could see, first, assets coming on chain. Second, these products being more broadly available to a wider audience.
Hmm.
Um, and that kind of happening, that I could see taking, a year, 2 years. Um, and then in 5 years, I think we'll just start to see more 401k, like depending on where we land, right? More 401ks being on chain, more, because guess what? Now we've gone from only having the safest possible assets, aka treasury bills, right, and stables and things
Hmm.
like that, and highly
Yeah.
speculative, aka like the bitcoins backed by nothing, or internet, depending on what you want to say, what you want to call it. But like the highly speculative and the highly stable, and we're starting to fill in that curve, right? And so what that means is that I could have my whole portfolio, instead of having kind of a brokerage account over here, my wallet over here, that's kind of more so for Solanas and ETH and things like that, and just having comprehensively only on chain. And I think we'll start to
Yeah.
see more of that. Um, as well, especially internationally, but also in kind of the US as well, as as long as all of these kind of players take the approaches, let's offer new products that don't exist elsewhere. Because if the only access point for you and me to bespoke invoice financing or factor financing, things like that, is on chain, and that's something we want, we will seek it out and go on chain. And that behavior pattern is really clear.
Yeah. Absolutely. I'm completely with you. I think that what they are, the classical digital assets like stocks, REIT, and so on, bonds, and so on and so forth. I think there will be also a lot less frictions in a way. And
Yeah.
but if we talk about, well, tokenization of a Rolex, well, that change a little bit the discussion. Of course, there are a lot of experiments out there, but you still need to have the physical object. They need to be in some place. There needs to be a certificate. There needs to be someone that check it and certify that it's real. And then you need to kind of, there are a lot more steps, I think, in that direction, and there will be a lot more friction also because, as you also said before, the regulation is different in different places.
Totally.
So I think there are a lot of steps done in that direction.
100%. Well, and speaking of tokenized Rolexes and things like that, well, that may not be like kind of the end all be all. One of the interesting use cases that from a project we talked to was, yeah, okay, let's tokenize the Rolex, but that's not exactly the end case. Let's also, like, listen, if you're willing to put that Rolex like in a neutral custody party, right? We can
Hmm.
give you on-chain liquidity. So let's say it's like, okay, you have a $20,000 Rolex. I'll give you 10 grand. And if you fail to pay back that 10 grand at, let's call it 10%,
Yeah.
um, you know, then I'll just claim the Rolex. And that's one thing we've seen that's like, okay, like that actually makes a lot of sense. There's a lot of kind of high value luxury goods that people would love to get liquidity on. And start to earn a return arbitrage on chain.
I completely agree with you. And the same as will be also for example, for houses, building, commercial activities, and so on and so forth. There is a lot that can be done, a lot of liquidity that can be unlocked, right? If it is tokenized, there will be just more, more stepping stone to verify that, well, that house exists, for example. People can
Yeah.
live inside it, right?
Absolutely. Right. I remember even, and that's a problem that's not only for tokenized assets, right? That is one, like we have appraisers and kind of inspectors and all those things for like a house, for example, right?
Yeah.
And I remember at my old company, they gave a loan out, and the guy basically bought the house and just raised it, just like literally tore it to the ground, and they wouldn't have known. It was within like 15 days, so there was still the loan was still callable, and one of the inspectors just happened to drive by it, and that's the only reason that they found out. Or it's because he could have like rebuilt the whole thing. It could have been 2-3 years before they checked. Like, oh, like must have done a remodel or something. I don't know when that happened. But yeah, I mean, it's a huge problem. So like,
Yeah.
getting the right players to step in is like, who's going to handle that piece of it, right?
Yeah.
And I think there's efficiencies, with oracles and things like that can be unlocked, but still having those I think is important.
Absolutely. Absolutely. I've seen startups experimenting with like a 24-hour camera. So they put basically the Rolex and they put a 24-hour camera that, of course, you can also fake that thing. But they show you that the Rolex is still there, right? So you
Yeah.
can still count on it in a way, right?
Yeah.
Okay, I think that we can start to wrap it up. Jack, it was a super fantastic conversation. It's been a pleasure talking to you. And thanks a lot for giving us a very deeper perspective into RedBelly, but in general about real world assets and about your incredible knowledge also in the area of finance, as I can see. How do you want to close this chat?
Yeah, I think first off, thank you very much for having me. We really enjoyed the conversations. I appreciate the questions on your side. I think they were really well informed. And I'm always happy to share about RedBelly and RWAs. I think the future is really bright. I think it's also one of the things I want to say is like we're very early, right? This is where crypto
We
overall
are.
was in like 2016. I'd say, where it's all the primitives and all of these kind
Yeah.
of processes are being thought out and built by very smart people. And I'm very excited for the future, and I'm always happy to talk with other kind of bright minds in the space to see what that future could look like. But very, very, very excited for kind of the future of RedBelly. Very excited about the future of RWAs, and again, thank you very much for having me.
We are also very excited, Jack. Thanks a lot for coming to our podcast and for the fantastic chat. And we'll talk again then in the future. And let's see where we arrived with the real world assets and RedBelly.